Hello, my Teaserking family. I hope I am live now. I'm going to have to trace myself. Hello, my Teaserking family. How is everybody today? All right, so let's see. Okay, I'll keep it on. Okay, looks like I am live. I am moving, but I don't hear anything. Okay. All right. Sorry about that. Nothing I can do. I'm going to have to restart. So let's talk gold first, and then we'll get back to this. YouTube freezes me. I don't know. I'm still moving, so I can't really know that I'm frozen. Greg John said something to me. I'm frozen again, or I was froze. What is that? Is that I'm frozen now or not? Do I have to restart it? Gold's back to 22.95. No, you was. Yeah, I know. That's why I reset it. So don't tell me I'm froze, because now I'm going to think I'm froze now. All right. So if I freeze now, tell me. If I don't freeze, I don't need. Yeah, I know. Well, but it's funny when I reset it, it unfroze. So I only got 10 minutes in, so I'm going to delete that one. No, you was. Okay. So anyway, so gold's 22.95, silver 26.35. Gold had its 10 o'clock drop from 23.04 to 22.79, and now it'll get back into the 23s. They're running out of gold to do this with, because they need to have the physical gold to do this. And if they don't, then they won't be able to keep doing the derivatives and keep knocking the price down. But it's not going to last. Don't worry about it. So Mark Mcgwire, watched his video, a little confusing as usual, but he doesn't get like direct answers. He does say that the gold cartels won't be able to keep going. The dollar, they didn't realize how severe brics was, how close they were to coming out the gold-backed currency. Now they realize it's next week, and the U.S. is going to get killed because they're not prepared for it. Gee, I'm shocked. These idiots in charge aren't prepared for something. So anyway, that's what Mark Mcgwire says. We'll go through that. Egon had an article in Twitter, which I was talking about, which we can go back into. So on Twitter, Egon, if you go into his Twitter, he posted something, and then you click into it, and that's what this article is. So I was halfway done with this article, and I got to go back to the top. So quickly, his in summary is saying, you know how you fill the stadium with water? It's 95%, or it's 7% the first 45 minutes, and the next 5 minutes it fills. He says we're in the next 5 minutes now. We're starting. It's going to go. The dollar's going to explode. The debt's going to go to the moon. The dollar will be worthless. The assets will bust. This is basically what he's saying. Bonds are done. Why would you buy a bond if you can't get paid back? So now is the time to get rid of your dollars. I know some people wait. Oh, I'm waiting for it to drop. No, now is the time. Get out of your dollars, gold and silver. Keep a little bit of dollars for some bills. Like I just paid rent, so I got credit card bills, but all that will go away because the the debt will go away, and so will the assets. So if the debt goes away and the banks start exploding, then are you really going to owe your credit card? I mean, they're going to have to just write it off because there won't be money to pay for it. So the money, if it isn't backed by gold, go. So then Egon starts talking about, you know, get out of the stock market, get out of bonds, because you'll never get paid back on your bonds. The stocks will all collapse because there won't be, the earnings will go away because the dollar will go away and the debt will go away. I mean, so if you owe a lot of debt, that goes away, but your assets go away. So he says, out of the stock market, which that's been 3 years, out of the bond market, out of the banks, out of Bitcoin, out of anything that's not backed by gold, that is paper. That's toilet paper. Let's quickly, interest rates will go higher because of the inflation. You have to charge more. I hate to reread this, right? But it didn't record. It froze. I don't know what the hell that is. The Fed will keep rates down. I hear all the experts say, but they can't because of the thing, Ponzi scheme. So this is a Ponzi scheme only worth of a banana republic, and there's where the U.S. is heading. So strongly rising long rates will pull short rates up, and that's when the fun starts. Any great power that spends more on debt service, which is interest on their debt, than on defense, will not stay great very long. So because it's not productive. So you're taking the money to pay interest off versus to buy a factory and have machinery and IT and all that stuff. You're not doing that. You're just paying, it's just going down the toilet. You're paying interest on yourself. Any great power, true of Habsburg Spain, true of ancient France, true of the Ottoman Empire, true of the British Empire. So based on this Congressional Budget Office, the U.S. will spend more on interest than defense already at the end of 2024. And the interest rate's going up to 1.6 trillion a quarter from 1 trillion because the interest rates will go up. So the debt goes up, the interest rates go up. Total federal debt was below, well, I'm not going to worry about that. U.S. bonds, buy them at your own peril. Issuance will accelerate exponentially. So they're gonna try to sell more bonds because they need money, right? It will never be repaid, and best will be probably defaulted. The value of the currency will fall. Well, I don't know where it could fall to. It's not worth anything. Don't kid yourself. It's not worth anything, but people don't realize it, still give it some value. You can still go buy gold with it, and you shouldn't be able to. Do you want gold or do you want toilet paper? I mean, would you rather have this? Let's say 280, would I rather have 280 of this or a tenth of an ounce gold? You make decide. I look like a professor. Well, that's why I am the professor. Hyperinflation's coming. And again, what is hyperinflation? I explained it before. Hyperinflation is just simply the fear of the money collapsing. So when you see the kid in Zimbabwe holding all these dollars on his chest, that's the dollars aren't worth anything. So the hyperinflation is the fear that the prices keep going up and the dollar's worthless. And then everybody gets scared because they don't have money, or the money's not worth anything. They won't be able to buy anything. So everybody gets hyper and the inflation is really hitting, and you won't be able to buy anything. You don't have the medium of exchange went to zero. So your paycheck's going to be worthless. And then you go to the grocery store and the money won't buy you anything. That's why you have the gold and the silver. The silver will buy you food, but how long will that last? They need to come out with gold and silver backed currency so you can get paid in it. So the problem is going to be you're not going to get paid in the gold currency, but when you go to the grocery store, you're going to need it to buy. So how are you going to do that if you're going to work, you're not making anything. So people won't be working. That's why the stock market will collapse because, who's going to buy a car? How are they going to even sell the car? That's hyperinflation. It's the fear of the inflation is worse than the actual inflation. And it ends up where, you're buying milk and eggs. At 9 in the morning, it's $10, and at noon, it's 15, and by the end of the day, it's $25 for the milk and the eggs, and then it just keeps getting worse and worse, and that's coming because they keep printing. Global debt. You have 3 quadrillion in derivatives, which is as you loan out. So like the bullion banks, have 5 ounces of gold and buy 500 ounces or sell 500 ounces. And what that is that's the leverage. So if you buy stock, you put 10% down and you leverage the other 90. Well, those are the derivatives. So there's, 3 quadrillion liabilities in derivatives. Scary shit. Bancarota derives from broken bench or broken bank. A rotten system can never be saved, and this is where the expression comes from. But neither a bank nor a sovereign state can be saved by issuing worthless pieces of paper or digital money or Bitcoin. It isn't money, and you can't use it. I know the thought of Bitcoin is to get out of the dollar because they're going to inflate it, but you're not backing the Bitcoin by anything. So sorry, that's the same thing. The problems in the banking system have just started. Falling bond prices and collapsing values of property loans are just the beginning. So look for the banks to go. We're in a lot of trouble here. That's why when Luke says, how much gold and silver do I need? The answer is as much as you can. As much as you can get out of your dollars, buy your gold and silver. And then this is the shit that's going to happen. So only people in gold and silver get to survive because everybody else who has $1 million, it's not going to have a value because these idiots are printing it to death. The problem is most people trust the idiots who are printing it to death, and they don't understand. MMT says, go ahead and print. There's no consequence. It's terrible. Unrealized losses on bonds held to maturity are 400 billion, and losses on bonds are available for sale are 250. So, in the banking system is sitting on 650 billion just on the bond portfolios. As interest rates go up, the value of the bonds go down. Exponential moves. So we will see debt grow exponentially as it has already started to. Exponential moves start gradually and then suddenly, whether we talk about debt, inflation, or population. The stadium analogy. So after 45 minutes, 7% of the stadium's is in water. You're going, oh, there's nothing to worry about. In the last 5 minutes, the stadium's full. And that's what he's saying. So, and I used the Titanic. So the Titanic hit the iceberg. Nobody thinks anything of it. It's filling with water. Nobody thinks anything of it. Then when the boat starts going down and down and down into the water, people start going, I think we're fucked. And so it's exponentially, the boat fills up and the boat goes down and the boat goes under and everybody drowns. And you got to get to your lifeboat. So as I've said, you get to the lifeboat first. You don't get to the lifeboat. You don't wait till you're in the water to get to the lifeboat. You get to the water. You get to the lifeboat as soon as you can. The last 5 minutes of the financial system, the coming final phase is likely to go very fast, as I'm saying, as an exponential move, just like in the Warner Republic. So 1923 in January, an ounce of gold cost 372,000 marks. This is because of the dollar, right? So it was priced in dollars, I think $20. But that's how weak the mark was versus the dollar, 372,000. But by the end of November 1923, the price was 87 trillion marks because the mark had no value. Gold still had the value. So if you had gold, you were fine. It was still worth $20 because it's priced in US. Now, I don't know. It'll be priced in brics, I guess. Russian, Chinese, or just brics will price gold because the US, it'll be a 97 trillion of a worthless dollar of toilet paper. The consequences of a collapse of the financial system and global economy, especially in the West, can take many decades to recover from. It will involve a debt and asset implosion plus a massive contraction of the economy and trade. The East and South, China, Russia, Taiwan, Africa, and especially the countries with majority commodity reserves will recover much faster. Russia, for example, has 85 trillion in commodity reserves, the biggest in the world. That's why Russia's not worried because the commodities aren't, don't need to be priced in dollars. So they're probably talking mostly gold and silver, natural gas and oil. As U.S. issues of treasuries accelerate, the potential buyers will decline. There is only one bidder, which is the Fed, buying their own money. And no sane sovereign state would buy U.S. treasuries. Actually, no sane investors would. Here we already have insolvent debtors that has no means of repaying his debt except for issuing more of the same rubbish, which in future would only be good for toilet paper, but electronic paper is not even good for that. Now, here in Zimbabwe, this is what they think of their currency. No toilet paper in the toilet, no cardboard, cloth, no Zim dollars, and no newspaper. Zim dollars are the regular dollars. The zigs are the gold back. So don't flush your toilet paper. Don't put the toilet paper in the toilet. So the value of the currency will fall precipitously. I don't know how much more it can fall. It'll never be repaid, at best only deferred or more probable defaulted on. So they're going to default on all the debt, which means the dollar's worthless because nobody will want it. See, that's the problem. As I've stated, this is only valuable if somebody will buy it. If I put this auction out for this Mahomes 50 count and nobody buys it, it has no value. Well, what do you think after the U.S. defaults, what do you think the value of their dollar is going to be? It'll be zero. So this is where we're headed. So bonds are no longer an asset of value, but just a liability for the borrower that will never be repaid. So holding stocks, bonds, or property, all the bubble assets are likely to lead to massive wealth erosion as we go into the everything collapse. So the stocks will go down because nobody has money to buy anything. So no company will make earnings. Plus, it's in US dollars. The bonds, as we said, will be worthless, and the property will be worthless because it's it's in a bubble, first of all. So your $500,000 house goes down to 100,000. So I have my Canadian friends viewing. He can't talk, but he can watch. And he put 700,000 into a house. Well, good luck. Now, all I can do is tell you, all I can do is be stoic. Put the money in the gold. You want to buy the house? Be my guest. You should have bought the gold, and don't say I didn't warn you. I'm the professor here. You're not. I think I know a little bit more than you do. The new era of gold and silver for soon 25 years. I've been urging investors to hold it. See here, the S&P, including dividends, has returned 7.7%, while gold has returned 9.2%. That's a stupid analogy because it's been derivative down. So it's been 9% in a derivative down market, but not really. You can't really look at it like that. In the next few years, all the factors discussed in this article will lead to major gains in the precious metals and falls in most conventional assets, as we already know. Let's see. So all the sovereign states are going to hold their reserves in gold, not dollars anymore. So that's going to hurt the dollar, and that's going to help the value of the gold. And that's already happening. Everybody's getting out of the dollar and into gold. So everybody knows what's going to happen. It's like we're watching a video of the Super Bowl. We know Mahomes is going to win the game. So we're going to all bet on Mahomes. We've already watched the game. And so that's what they're doing. They understand that the dollar's going out. You got idiots in charge. I think you got China running our country. People want to say Obama, but I don't believe Obama's smart enough to run the country. So I believe that China may be running Obama. I don't believe Obama's running the country. And who benefits from all the craziness and the collapse is the Chinese. And the BRICS. Now, yes, it hurts them a little because who are they going to sell to? However, if you really think about it, do I want to sell and get US dollars? Right. So I have all this, I got electric cars, or I got cars, or I got boats, or whatever China has, and India and Russia and whatever. Do I want dollars for it? Arabia, I'm selling oil. Do I want dollars for it? What's the point of selling to us if you're not getting anything of value back? So I don't buy that they really want to sell to the U.S. anyway. We have no gold. What's the point of keeping the U.S. as a customer if they can't pay you? If they're paying you in monopoly money, do you really want them as a customer? So do you really want us to collapse? But we're not smart enough to buy gold, so it's just ridiculous. All right. In addition, gradually the BRICS countries are moving away from the dollar to trading in their local currencies for commodity-rich countries. Gold will be an important part of their trading. Thus, there are major forces behind the gold move, which has just started and will reach further both in price and time than anyone can imagine. You hearing that, Luke, Bobby? It's going that way. So just be patient. It's coming. So we can see it's coming. The tidal wave's coming. You can't stop it. How to own gold? Well, yeah, go to the store and buy it. And buy it in coins. Do not buy ETFs. Do not buy stocks. Buy physical gold. Nobody can screw you, but the stocks, they can screw you. And the ETFs, for sure, you don't own anything. And since they're priced in dollars, you're fucked. And then you'll never get, in an ETF, you'll never get dollars. So that might be why the ETF are down, is because nobody wants them because they're not real gold. They're not physical. So maybe that's why the ETFs are down. But Egon's not taking that into consideration. All right, now what's that? The real move in gold and silver is yet to start. By Egon. All right, so that's Egon. Now we go to, I'm still live. Okay. All right, sorry about that. I'm listening to myself to make sure I didn't freeze. All right, so let's go to Mark Mcgwire. I hate these stupid commercials in the beginning. Like, you want to get to the thing and they hit you with this stupid 5-10 second commercial. Here's what I was talking about, the African nations. So I'm so confused of what I said in the first video when I'm saying now African nations repatriate their gold. In other words, these three countries are saying, I want my gold back. And That's what you're trying to get. But will the U.S. do they even have it? And if they do, are they actually going to give it back to them, or they're going to say, no, 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 we're keeping it? I don't know. This is. I feel they won't get their gold back. That's just me. I mean, if you're trusting these idiots in charge, I wouldn't trust them at all. Anyway, eating my berries. So real quick, everything seems good with Daria. She keeps asking me, "Is everything okay?" In other words, when I don't hear from her for a week, I get upset. Not at her, I just get stressed. So she's now, So I heard from her before. I think she's at work. Yesterday she was shopping, but at least just touch base with me, right? That's all I ask. And anyway, so she was stressed about money, and I don't blame her. I think we're all going to be stressed about money soon. But so that's what's going on. So she's fine. So I'm relaxed, and everything's good. Anyway, I haven't heard from Jenna in 2 days. I'm not as stressed with Jenna as I am with Daria, but very strange. She was just on, and she didn't type me, so that's really strange. But she sees I texted her. All right, so Mark Mcgwire, and I watched it once, and sometimes you lose concentration. He talks so technically that my concentration wanders, and then I'm not listening to him, even though, like they're saying, what happened to the gold, and he doesn't really answer the question. Let's see.
I know that you have an update on the BRICS currency situation here, so let's start right there, can we?
Yes, Shane. Let's step through the action surrounding this upcoming BRICS launch. Now, the race by BRICS members to repatriate their gold to participate, and Yellen's realization that they have underestimated the scale of adoption, resulting in a sudden panic by the US to try and stop the upcoming launch. Now, we're currently evidencing a race by African and Middle Eastern BRICS nations to repatriate gold reserves currently in the custody of the US. As you can see, South Africa, Nigeria, Cameroon, Ghana, and there's 4 other African nations already that are each expressing concerns that their planned adoption of the non-dollar denominated BRICS settlement currency may result in their non-jurisdictional gold holdings being withheld or indeed sanctioned or in some way weaponized against them if they don't toe the line in the future. Now, these official concerns escalated last week following Trump's comments that he would not allow countries to go off the dollar because what he stated was, when we lose that standard, that would be like losing a revolutionary war. And these are his words.
So how is Trump going to, first of all, who is Trump? He's not president. He won't allow them. Well, what does that mean? What do you mean he won't allow? Who is he to tell me to go buy gold or not? So who is he to tell these countries to not join BRICS or not buy gold? Doesn't make any sense to me. But Trump's now realizing what they're realizing is we're fucked because we don't have plan B yet. In other words, we need to come out with gold-backed currency or otherwise. See, so really what's happening is the U.S. dollar's going out, and therefore you won't be able to get paid or buy anything with that medium of exchange. So you need to replace the medium of exchange. The system works fine, but you need to replace the medium of exchange with gold-backed currency. And this is the problem. Or they'll do a CBDC. Well, that's not going to help. That's still toilet paper. It's digital toilet paper, but it's digital. Bitcoin, toilet paper. Stocks and bonds, toilet paper. So as we just listened to on Egon, what are you going to get into? So it makes it extremely difficult to you got to change the medium of exchange to gold because you can't print gold and it'll stay. But then they can't print, and JP Morgan has the monopoly on printing the dollar, is going to go in the corner and cry because he can't, because he's printed us to death, but he's too stupid to realize that. So that's the point. Who the hell is Trump?
And then he said, this would be a hit to our country. Well, okay, so now whoever is in power is going to actually fight this. And the current administration, has also expressed similar concerns. We've looked at that before. And last week, it kind of moved on to the front burner. Now, there's a sudden realization that the US has grossly underestimated both the scale and the timing of such a de-dollarization move. And this was undoubtedly the subject of both Yellen and Biden's scramble visit to China last week. Now, Russia is chairing this upcoming multipolar BRICS meeting on May the 14th to the 19th, and China's presence is going to be closely observed by the unipolar, hegemonic Western central banks. Now, they'll be trying to assess just how far down the blockchain rails Glazier's BRICS payment system has traveled following stealthy beta testing that began 2 months ago. Now, along with our liquidity providers facing the wholesale markets, it's also our contention that the beta testing of this gold-backed currency into a tight for supply, already tight for supply, physical market, has at the margin largely been responsible for this unfactored central bank demand, which when weighed against a backdrop of ETF outflows has mystified analysts. Now, liquidity providers exposed to the wholesale markets assess the need to secure physical to back this currency was largely responsible for driving this recent 2-month over $400 rally into the 2400s. Now, this rally commenced directly following the Fed interventions we observed in February, which was tripped off when gold moved sub 2,000 spot gold. That was on February the 13th. That was a bottom. And obviously, yes, we have revisited that, but there's reasons for that we'll discuss. And we'll look at this current derivative-driven move through these returning central bank orders, but they've largely been laid off against the momentum-driven CTAs. When we'll look at this short-term action in a minute, but there is little doubt that Blinken's carrot and stick sanction dangling visit to China last week was primarily focused on finding ways to disrupt the grossly underestimated hegemonic dollar-busting Sino-Russia alliance. Now, while Blinken was widely reported by the mainstream media as focused on trial ballooning, sanction threats to disincentivize China from providing support to Russia's ongoing Ukraine military operation, but this was already underway, and there would have been a far easier, less public way for the US to have done this. Now, this scrambled together tandem US official visit, by no coincidence, it follows the successful beta testing and upcoming formal launch of Glazier's gold-backed de-dollarizing oil, energy, commodity currency later this month, 1st of May today. Right around the time this will be where we release Robert Kiyosaki's interview, which is going to be in a week.
Won't watch that one.
When you hear this recording.
Hate that guy.
Now, Western central banks have grossly underestimated the sheer scale of physical gold buying undertaken by the Sino-Russia alliance over the last 2 months. Now, even worse, the gold has been sucked out of the hands of the officially sanctioned CME, LBMA cartel's paper gold suppression scheme. and it's been alchemized into physical outside their control. Now, while Western officials are aware of and do report on the on-record foreign central bank gold accumulations, they're also aware of the significantly larger unreported off-record monetary physical gold purchases, which are flowing from the west to the east. Now, the ring fence, when you think about it, the scale of this 97% leveraged paper gold exiting this cash-settled CME LBMA ring fence, being converted into 100% physically backed NSFR-compliant physical gold outside the cartel's wheelhouse, has caught them extremely wrong-footed.
Hey, Andrew, as you outlined in our last episode, this forced compliance leads right back to what you've been talking about for a long time, Basel III, the NSFR regulations, where every central bank except the Fed and every gold exchange bar the Fed sanctioned, COMEX, had to become compliant. Do you see this coming to a head right now?
Yes, Shane, and thanks for the subscriber questions for that. Following the 50 years of Fed's management of the cash-settled COMEX gold futures exchange, the Fed is the only remaining global central bank that has not complied with Basel III NSFR regulations, meaning COMEX gold diluted with unbacked paper gold settled inside the COMEX casino's ring fence is grossly underpriced versus the physically deliverable gold price being discovered globally in the 10 times larger NSFR-compliant, physically backed physical exchanges.
So that's what I keep saying. So basically in English, it's what's the word I'm thinking of? You're kind of diluting. There you go. You're diluting the gold price with the paper, right? So there's physical and the paper diluting the price, and it's 2,300. But in just the physical world, we know it's 23,000. That's what I keep saying. And so basically, as they dilute it, that's why I don't believe the price is where it is. That's why it's don't even worry about COMEX, because it's a diluted price and it's dying out. So anyway, where are we at with Mark Mcgwire?
Now, the ramp-up in physically settled global central bank demand has evidenced a significantly higher real supply-demand price to emerge outside the paper-diluted CME LBMA ring fence. Now, the Fed's vulnerability lays within their paper gold versus dollar settlement structure. Now, in order for the Fed-run, non-compliant paper-diluted COMEX exchange to remain credible, it has to facilitate the ability to EFP COMEX gold open interest into the FX global spot markets. As we previously outlined, the EFP backdoor is just the paper markets. It's the paper markets' Achilles heel. And up until the BIS recategorized FX gold as a first-year asset class on the 1st of January 2023, historically, by design, the official gold price suppression scheme enabled unallocated COMEX gold to exit this EFP backdoor. We've done tons of episodes about how that works. What happens then? This outflow landed into the hands of, it used to land in the hands of the same actors unallocated over the counter book. So these unbacked gold positions could be endlessly shuffled between the sanctioned market-making cartel members who had a footprint in both the cash-settled, unbacked COMEX exchange, as well as the previously unbacked, 10 times larger, unregulated, bilaterally settled, over-the-counter FX markets. Now, as an example, out of the historic 600 to 800 tons of gold cleared, shuffled daily on the books of a closed loop of a daisy chain of cartel members, real physical deliveries determined at the collusive gold fixes have only ever averaged a relatively tiny 3 to 5 tons a day versus the 600 to 800 tons of gold cleared and shoved amongst the books. However, following the BIS recategorizing FX golds as a first-tier asset class, every liquidity provider providing liquidity into the FX gold market has to be physically backed. And which has opened up the multi-trillion-dollar FX gold market to be marked to market alongside.
Yeah, we
right
know.
Now that is forcing the paper market to disconnect. Is that correct?
Yes, Shane. So in summary, what has accelerated the current 2-month paper to physical divergence is the race by central banks to diversify into physical gold. Now, the gold rally has almost exclusively been driven by Russia and China aggressively buying physical gold to provide sufficient liquidity to back Glasniev's alternate beta-tested gold-backed commodity currency. So, given that this expanding number of current BRICS members generate and or consume the lion's share of the multi-trillion-dollar oil and energy complex, the successful adoption of this alternate SWIFT settlement currency will drive this unfactored, highly inflationary de-dollarization process. Now, commodities priced in gold will be stable, but as the multi-trillion-dollar oil trade increasingly migrates into the BRICS gold-backed clearing mechanism, it's going to require additional central bank gold to be purchased, which will ultimately force global gold price revaluation on the Western BIS compliant central banks, who on average have around, as I say, 4% gold versus GDP backing their respective fiat currencies. They're going to need to up that. And this leaves the Fed, the only central bank still betting against gold. Empirical evidence indicates that a significant percentage of the 8,133 tons of Treasury gold the Fed manages on behalf of US citizens are rehypothecated. This indicated that
Rehypothecated means they don't have it. So it's like I have the Mahomes card, but I sold it to Bobby, but I still have it. So Bobby owns it. And then I say, well, I have the Mahomes card, but I really don't. It's now Bobby's. That's rehypothecated. So you can see the problem. Now, what he said is that if you have gold, the value of the commodity, it'll keep the value of the commodity. So in English, if you have gold and the oil price shoots up to $200 a barrel and you need gold, you need oil for your car, you pull out your gold and it's the same price. So whatever it is, whatever the gold price of oil is now, when they raise the oil price, the gold will keep value of it. So let's say it's it's what? So let's say 3 ounces of silver. Well, no, let's say an ounce of silver is $25, or like $35, and that's what it costs you to fill up your tank. It'll still be the same. So whatever the price of oil is, the price of silver will go with it. So you'll still need 1 ounce of silver to fill up your tank. So that's how you have to look at it. So that's why we have the silver. So now you trade it in, you can fill your gas tank with the silver. So that's what it means. It'll stay in gold's 2,000, 2,300. The oil is only, $3 a gallon. So gold would be way too much, but an ounce of silver will be pretty close to filling your gas tank. So that's why Luke's going to be busy with his silver going through the box to buy the gas. Now we'll also trade 10 ounces of silver for gold. So that's where silver is really going to move. And so they're hammering it down. Like I said, for the Tomahawk missile, it's 500 ounces of silver. Let's keep the price down, but they won't be able to do that much longer. So it's all coming to a head very soon as BRICS announces, hey, we're going gold. See you guys later.
4 to 5% of gold they purport to have to back the percentage of foreign debt outstanding is actually in reality likely massively in deficit. A negative number. In other words, the Fed's only solution other than to default is to revalue Treasury gold to market. One thing for sure, oil priced in dollar terms will diverge significantly higher, and estimating the layered scale of BRICS adoption, by the end of the year, liquidity providers estimate $200 gold oil is entirely possible. And if gold is not revalued to market by Western central banks, the inflationary fallout stemming from oil priced in unbacked dollars would be sufficient to trigger a too-big-to-fail derivative market implosion. This could not be averted. And you can ask anyone, if gold was trading at $200 to $300, what kind of a derivative implosion would happen? Now, a very likely South China Sea or Taiwan escalation looks increasingly possible, even if it's by mistake, and if triggered, likely gets close to Russia's estimate of $300 per barrel. Yet oil and commodities priced in gold would be relatively stable. That's what's spooking these officials. Large monetary gold purchases by the PBOC reflect a ramped up strategic de-dollarization process. And if you go back a few episodes where we focus on how China had been able to covertly accrue some of this 40,000 tons of gold by exchanging some of their hidden over $3 of FX of the FX shadow banking reserves that the U.S. Trade and Treasury representative, which was Setzer, he drew attention to back in 2022. That's only a couple of years ago. And as we outlined previously, it is sure that the Fed is as best as possible trying to manage the exit of their 8,133 tons of largely rehypothecated Treasury positions, spurred by what our liquidity providers report is an overwhelming queue of foreign central bank repatriation requests. Some of them are not even on the record. Ironically, all of this echoes Setzer's concerns about China posing risks to the global economy. In fact, it's echoing Setzer's word. It is, in fact, the Fed that is now presenting a new risk to the global economy.
And finally, Andrew, let's answer the question that came right up at the top of the show, which a lot of people asked, is that what are you seeing now in the markets short term?
Very short term, looking at the bigger picture, the action has been constructive. What we have seen we've seen the bulk of the exit of the CTA long froth. You know, these are the guys that buy a long position and never take delivery and are easily rinsable. And of course, you look. It's so simple. You go to a moving average like the 10-day moving average. That's their trigger point. They automate the algos are triggered to it, so that you see a bunch of people exiting. Then we also see a round number being targeted. The dip sub 2,300. But what happened there, while there is this cover of paper market selling, naked short selling at this point, we see a large layer of these rinsable CTA shorts accruing. Dips are going to continue to be physically sought. And we're recording this episode on Wednesday ahead of FOMC. And of course, Friday's non-farm payrolls, which you'll have the data on when this is released. So with most sitting on their hands, we expect the obligatory Fed-driven, algo-driven volatility to continue for now. However, given the array of stagflationary news outputs, we see a hawkish Fed spinning inflationary rate cut delays as a solid reason to step up gold and silver buying. Stagflation is a perfect environment for gold and silver. And following 2 weeks of healthy consolidation that has seen, if you're a 10-minute chart trader, you're pulling your hair out. No, look at the bigger picture here. We just had a massive rally. It's healthy consolidation, i.e. ditch these useful fools that have joined on board. And it's seen the rinsing of naked long, non-sticky CTAs. And we'll look at the underlying bullish for gold drivers that has kept a bid under gold into the concerted effort by officials to try and really chart paint a gold correction into what were technically overbought conditions. Now, these efforts followed gold coming close to triggering another layer of central bank buy stops at 24.50. Now the high being 24.48 to 80 actually. This is when the orchestrated mainstream medium spin began. I always watch US mouthpiece Bloomberg Intelligence. Now I watch Bloomberg all the time. It's not a problem, and I seek them for good data. But when we see the Bloomberg Intelligence guys come on, whether it's Ukraine, whether it's whatever it is, you have to know it's an official spin. And what they were doing was attempting to parachute in and try and gaslight a gold market correction narrative, which came in telling investors to sell gold. What made this so obvious is this call was based on really just a tiny one-day $41.50 pullback, which had just followed a 2-month-long $450 month gold rally, printing an all-time record high. So look, given the technically overbought conditions, we expected the naked long CTAs to take the bait, but we also know that the led by the nose CTAs dipped below the central bank physical bids at 2,300 will be forcing the commercials to take the long side of the herd of naked short momentum sellers. Now the dip, sub very large central bank physical bids below 2,300 will ultimately backfire. Now here's an example that we captured last Friday when the April futures contract was called for delivery. Bearing in mind that you need to explain this. So the first notice day for April delivery of the COMEX contract was pegged really at the end of March. And gold was trading at 21.75. So the shorts holding these delivery obligations had a maximum of 30 days to make delivery under that warrant. Now, as a note, it would be far cheaper for a genuine seller to really discharge the friction of holding this insured, stored bullion as quick as possible to completely discharge this obligation. But having not done so, as the last day to make delivery of the April contract approached last Friday, it became quite clear that these COMEX sellers who'd been dragging their feet in the hope that they could rig the gold price lower had got it wrong. Now, historically, over the course of a 30-day period, this old cartel trick to delay delivery found ways along the way to disincentivize their longs waiting to take delivery to fold their hand by discounting the price. They failed. And as we have captured here, with the price having risen by a massive $175 per ounce to spot 23.50, this is the spot chart, you can see that price at 23.50, with no other bullion to deliver, the insiders had two options: convert the short sold futures contracts into physical, or to buy back the short bet at a loss. Having exposed themselves to being naked short and with spot gold rising above 23.50, as captured here, you'll see that a massive over $30 premium over spot was being demanded just to buy back these bets. Okay, yes, they managed to trick in fresh sellers yesterday, which was the very last day of delivery. But it hasn't gone unnoticed. This whole process hasn't gone unnoticed. And really, they're being caught with their hand in the till. And what it illustrates is that the attempts to buy these lot back into a rigged discount had actually failed. And while the Fed agent banks were able to be bailed out for cash, the 97% of mark-to-market leverage unwind. That was the problem for them. The upside breach of this spot 23.50 round number had spooked shorts, driving the April GC premium to this over $30 premium to exit these obligations, cash settle these obligations. And this evidenced tightness in the physical market for immediate delivery. And while officials managed to chart paint a lower weekly close in both gold futures and silver futures, current prices are too close to central bank support to really risk adding too much more to running personal naked short supply in excess of how many CTAs can be sucked in to sell, basically. Now, given the large T+2 spot delivery overhang following this options game dips into the spot round 23 number, and the proximity of fresh reported central bank bids reaggregated at spot 2300, and that's equivalent to futures 2310 in round numbers, has required a very large supply of naked short CTA sellers for commercials to offset the ETF delivery exposure, the EFP delivery exposure, excuse me. Now, we see dips to be jumped on by central banks. Now, as the COMEX once more trips out the led by the nose CTA naked longs, both gold and silver futures have consolidated healthily, ditching this CTA froth and sucking in fresh naked short supply, all this time working off the technically overbought conditions, which, following FOMC today, by Friday's non-farm payrolls report, no matter what, of course it's going to be a politically sought beat. So by the time the dust has settled, gold and silver will have reverted to actionably technically oversold condition. That will not be helpful for the insiders. Shane, silver is close to printing $1.50 below what even the insiders' option sweet spot is at $28. The dip below has tightened up wholesale supply. And given the expanding disconnect between the strong Chinese, Indian physical market demand and the influx of naked paper market supply, liquidity providers expect silver to be first out of the gate to rebound. I know you'll like that, Shane. Well, now we have outlined the short term, and we've outlined the bigger picture footprints. But really, there's only one question left to ask. And it is a question that Robert Kiyosaki has ended.
Not interested, Robert Kawasaki. So, as we still wait for it to go, so he's saying it's a pullback, but it's a paper pullback because there's no physical. Nobody's stupid enough to sell their physical. So, with that said, let's see what gold's at now. And gold is at $22.97. So it had spiked from 23.04 all the way down to 22.79. But as soon as it does that, the 10 o'clock crap, now we're back to 22.98, 2300. Silver 26.46, which we know as well. But as the BRICS come, and they're still trying to keep the price down, but that's not going to last. It's almost done because they need physical gold to keep doing this, and there's not that much physical gold left, and they're going around COMEX because they can't get the supply they need for gold and silver. They go to COMEX, they can't buy it. They don't have it, so they'll start going to the mines. So the prices, as we just heard, will start really going up, and that's all we can do is just wait. But we know it's going to go up. Like I keep saying, you eat a bunch of cake, you're gonna get heavier, and you're gonna get sicker, and that's what's going to happen. So as you keep printing the dollar, the dollar's going out, and gold's going to go to the moon. So that's just right along that line. So that's where we're at. We understand that. So I'm going to delete the other one. I apologize, but I guess I froze after 10 minutes or so. And so I had to basically redo it. So it's a little bit frustrating because, I don't want to keep saying, even though I do repeat, I don't want to keep, I don't mind if I repeat by accident, but not on purpose. So anyway, that's what's happening. So the idea was to do this quickly. I really wanted to show Egon, and then I watched Mark Mcgwire this morning. So I said, okay, again, he's really hard to follow. He's too technical and he gets off on tangents, and you're like, what did he just say? Just keep it simple, Mark. What are you saying? So Egon's much more simple, much better at explaining, reading that. So we see the Titanic is just about sunk, and the gold and silver are just about to go. They had 5% left to fill the stadium is where we're at. So just think you don't want to be caught. Now, it might take a little bit longer than we think, but why take the risk? This is a bad risk reward. I mean, this is not, oh shit, I should have bought gold and silver. This is, you're still holding dollars. You got to get the hell out of the dollar because you're not going to have a chance. As I read you about Germany, right? It was, what was it, 23,000 in January and 97 million or whatever in November. I mean, so it took you so many dollars to buy the gold. Here, it's 2,000 now. Okay, buy it, or 20. I think you can buy it for 2,400. If it's 20, it's 22.98. So I can go to the store and get it for 23.98, maybe 23.60 or 23.70 for like a maple leaf. But I could buy it. But if you keep waiting, once BRICS announces, and then all of a sudden that gold price really goes and everybody de-dollarizes and the dollar's worthless, it's going to take so many dollars to buy the gold. It's going to be a joke. So you're going to need $20,000 to buy the gold. That's what I'm trying to prepare you for. Don't wait on it. Buy it now while you can. So anyway, so Mark Mcgwire, again, he's on, or Egon's on Twitter. And so he wrote that article. I expect him to still do his videos. Mark Mcgwire, I don't check on Twitter. He's just too technical. It's like my economics class. He just gets a little bit technical, has some terms that you don't know what the hell he's talking about. And he's a little dry and a little hard to follow. He's not a really good teacher. He doesn't understand he's teaching. He just talks about it, but he's more lecturing than teaching. I'm trying to teach, so I want to make sure you understand what I'm saying. That's what a teacher's supposed to do, not talk. Like some Mark Mcgwire says, well, we talked about ring fence before. Yeah, but nobody knows what the fuck you're talking about. So if we don't know what it is, we still don't know what it is. So the fact you talked about it before. So BRICS is coming up in a few weeks, and all the central banks are buying it. And we believe there's no gold in Fort Knox or the Fed, wherever. If they had it, they'd prove it, but they won't, because we saw money heist. And as soon as they saw the gold out of the bank, the debt collapsed and the dollar collapsed and everything else. And that's how the professor escaped, by bringing in gold-colored brass. And the brass was then put in, and everybody thought they got the gold back, but they really got brass back. So I need to go buy some brass, I think. But that's the point of it. If people realize that there's no gold, then the dollar collapses. And so that's why they won't show it. They'll just say, we don't want to show it. Well, because they don't have any. Because if you did, you would show it, obviously. I mean, I tell you about Daria. I show you a picture over here. This is Daria. This is Jenna. So you can see that I'm actually, I can back up what I'm saying. I'm not lying. But if I say, yeah, I'm dating Daria and I can't produce a picture, you're going to go, oh, this guy's full of shit. What do you mean you're dating this girl and then you can't show a picture of her? So anyway, I'm glad she's okay. I'm glad it was nothing serious, except for she realizes she needs money and she doesn't want to keep coming to me for money. I don't know if she doesn't want to feel like she's owned by me. Like if I don't have them, I'm screwed. Or she's just trying to be nice and, yeah, you help me with food, but I can't, I need clothes for my daughter and me, and I can't just keep coming to you. I got to take care of myself. And I think that's kind of part of it. And anyway, So we are hopefully meeting as soon as her mom can get a flight to St. Pete. We will meet probably in Serbia, I guess. She says she doesn't want to meet in Russia because she wants to go on a vacation with me. So we will see that. Meanwhile, I'm staying stoic. That's all I can do. And that's it. So I'm going to have some lunch. I'm going to go to the pool, and I'll be back later with baseball. I was really excited. I hit my 10-unit lock yesterday. Colorado over 7.5. I hit the Cubs over 8. And there was a few games that were the pitching changed. The Washington game and the Yankee game, I noticed the pitching was not the same. When I analyzed the game, I'm going based on the pitcher. But when I looked in the box score, it was different pitching. It was not like I said to take Washington, but when I looked at the pitchers, I would never have taken the Washington or the whoever they played, switch pitchers, and that was like 2.0 against 2.0. Well, I wouldn't have taken Washington. I would have probably taken the under. And the same thing in the Yankee game, they switched pitchers, and I took the Yankees. I think Pitt switched pitchers, and then so now it was also an under. I don't know what's going on there because I'm reading it, an hour or two before the game time, and we're getting different pitchers or with different ERAs than what we're seeing. Anyway, so we'll keep an eye on that. We did lose the Philadelphia game. They had to win. It was game 6 at home. They just beat them. They had to win, and the Knicks killed them. So now we get better matchups going forward. I think you got rid of the 8 and the 7 seeds. The only low seed is, I think, Indiana, which I think plays tonight because Milwaukee's got some injuries. But otherwise, pretty much just 1, 2, 3, and 4 will be there. And then we'll get some good series and good bets. All right. Any questions or comments on this? This was a good Mark Mcgwire from the fact he didn't have a guess, but not a real good Mark Mcgwire. He just has a hard time explaining. So we know what's going on. All the BRICS countries are buying gold. My thought is if you want BRICS dollars, you got to have gold to buy it, is what I think's happening, but I'm not sure. But anyway, that's where we're at with it. So all these countries, 50 more countries getting out of the dollar, joining BRICS, a lot of Africa, a lot of Asia countries, a lot of Middle East countries, Saudi Arabia, and then you go Brazil. And I'm not sure about Venezuela. But then you've got Argentina not going to it, which is surprising. They want to be on the U.S. dollar. I think that's the U.S. dollar just blackmailing them because I know Fink went down to Argentina and all of a sudden they're on the dollar as their hyperinflation is going through. And you're like, what are you doing, man? Why wouldn't you go on gold? If you're not going to do BRICS, at least go on your own gold back system. Why would you go on the U.S. dollar? It's broke. So, like I said, Trump can say what he wants. Oh, don't get off, don't de-dollarize. He can say it, but it ain't going to happen, and he ain't getting into office. I don't know if there'll be an election because I think when the shit hits the fan, we'll never get to an election. If we do, Biden will probably win because they don't trust Trump, even though because it's not a fair election. It's not, our votes aren't being counted. It's ridiculous. But the moral of the story is better buy your gold. This is worthless. And everybody's getting off of that into gold. And you'll see on the 14th, you'll see a week from Tuesday, BRICS going to a gold back. It's already announced. So they'll be in it very quickly, like Zimbabwe announced it. And then a couple weeks later, they've started printing the gold the gold zigs. And, and everybody's tired of the dollar bullying them around. So they're all going to get off. Russia will defend, or China will defend them from the U.S. Saudi Arabia, I don't know what they're waiting for. But they're supposedly in BRICS, but we're just waiting for them to officially say yes. because they'll want to get paid for their oil. That's about it. So gold, don't worry about the paper price. It's 2,300 right now. Don't even worry about it. I know Luke gets worried about it, but don't worry about it. It's going to, you'll see a zero at the end of it soon. People are, it's like people think Caleb's good. Why? Look great against Notre Dame and UCLA and Utah. And I mean, come on, he's not good. We can see that. We can see the variables that make him good. He doesn't have. And we can see that how good Penix and Bo Nix really are. And everybody's saying no. Well, the same thing with gold. Everybody thinks, well, this is his new high, 2,400. Yeah, because it's stuck in paper and it's done by derivatives and people selling these derivatives to keep the price. It's price fixing. Nobody's selling gold. So it's all the derivative players because they're looking at a moving average algorithm or something. Well, that's going to break because they need the physical gold to do it. So all the suckers are in thinking it's going to go down, but well, wait, at 2270, no, it's back at 2,300. So they keep getting screwed because they keep shorting it and it keeps going back up. So I don't know if they have any money left, but it's becoming where they're getting to the end. All these bullion banks doing the derivatives instead of buying the gold. So anyway, I was on LinkedIn roughing up a few people with my with my skill. So one guy said he's retiring, and I said, I hope you have gold, otherwise it'll be a short retirement. And then one guy put up some statistics, and I said, it doesn't matter. The dollar's going to zero, and gold's the only out. And he said, well, that's what I'm saying. And I go, it's not clear that's what you're saying. You're obviously a Keynesian. There's some director of a mutual fund or something, and I'm just lighting him up, going, you're a fucking idiot. You don't know what you're talking about. So he, is saying, because he's showing the stats, inflation and, the GDP and all that crap. And I'm going, I don't care about that. That's bullshit. All you need to know is that the dollar gets printed. It's worthless. That's all. See, just keep it straight. Dollars printed to death, 20 trillion here, 130 trillion there, $150 trillion. It's worthless. I don't need to know GDP, which is fake numbers and all this other crap or prices. It doesn't matter. That's the point. All it is it's like the Titanic. The iceberg hits it, the water's coming in, and he wants to explain the water temperature or how fast the ship's moving, or, it's like, all that matters is the water is coming in the boat. We got to get the fuck out. And, don't tell me what time it is. Don't tell me how cold the water is. Don't tell me this, that, or the other. Just the reality is the water's coming in, the boat's sinking. So that's all I'm saying. They printed the money. It's worthless. So I don't care about your little stats. But you sound like a Keynesian if you're bringing up stats like that. Austrians we don't need stats. We get the concepts, right? That's how it's easy to explain. You understand it. Anyway, that's about it. I'm going to delete the first one because it got frozen and I keep talking, so I don't know what I missed. But basically, it was Egon, and it was the dollar, it was the gold price, and the countries wanting their gold back is these African countries, which is going to be a problem, I think, because when you don't have gold, it's hard to give it back. And I'm worried that they're waiting so long. They should have asked for it a long time ago. And it shows you Africa, though, they probably didn't trust France or the other people. But now they don't trust the U.S. So there's no trust in the U.S. Just be careful. Buy more gold ounces or half ounces, because if you need to travel to get out and you need to get, I'm thinking I'm on a Lufthansa going to Europe. If I have 10 gold ounces in my pocket, I got a ton, right? And it's easy to hide in my pocket, and nobody knows. when I go through security, they're looking for weapons. They're not looking for gold or metals. So you just, take about 10 quarters, and then you take the gold out, and then, you got to put your shoes in the tray and your wallet and your belt, and you just stick it in there, put the gold down, put the quarters on it, and they're just going to see nothing, metals, but they don't care. And then that's it. So you just put some gold into it. And then once you go through security, you're done. You don't claim it. So when I landed in Barcelona or Portugal or Switzerland, you're not claiming anything. Do you have anything to claim? No, there's nobody even there. Half of Europe, there's no security when you get to customs. So you just walk right through. It's like, do you have anything to clear? And if you just walk through, and if you do have something to clear, then you go over there. But if you don't, you just walk through. You just walk through. I've never been stopped, getting off the plane at half of these airports in Europe. You never get stopped. Like, are you declaring anything? Nah, there's nobody there. Nobody cares. Barcelona, Portugal, you just walk right in. Germany, you walked right in. I know Ukraine's never open. Russia, I don't know. But I would assume that you just walk right in. Nobody thinks you're carrying gold because nobody knows about it, and it's all the central banks buying bars. So nobody's even really looking that you have 10 ounces of gold in your pocket. But how are you going to carry all the silver? So this is what I'm really thinking about, is what to do when the shit hits the fan. The dollar won't have value. So I got gold that I need to kind of get BRICS gold backed currency. So I'm going to need to get to a BRICS country, or maybe we will use BRICS gold currency here, which they use US dollar there. So why not? But you don't want to, when it gets to that point, you don't want to get back into the Titanic. You want the gold backed BRICS currency for your gold if you need that. I mean, probably if you're going to buy a house, you'll just use the gold. You just give him an ounce. Here you go. I want your house. And since he doesn't have gold, he'll need money. He'll take it. That's the beauty of it. So keep in mind, you cannot lose with gold. It can never go down in value. I mean, the paper bullshit, but that's going away. And that's what's stalling silver. But at the end of the day, that's it. Especially with all these BRICS. Nobody wants the dollar. They just won't be able to keep doing these derivatives, and it's all going to blow up, and the dollar will lose its value, and you're going to be sitting on gold, and you won't be able to buy anymore. The only way you'll be able to buy gold is with silver. So you'll take your 10 ounces of silver and buy an ounce of gold. You won't be able to afford it with this. Keep that in mind. So be careful. So if you're traveling, it's a lot easier to have 10 ounces of gold in your pocket than it will be to have 100 ounces of silver. And I don't know if it's going to be a problem or not, but and then go to a coin store or somebody who will buy it. But then we're going to have to check countries, because we're going to have to see about paying tax on it. I'm not sure. So if I go to Russia with it, am I going to have to take the gold, pay a fee to do it? But I can't sell it here because I'm going to get this crap. So this crap's going to be worthless. So I gotta think this out. So I'm going to the pool. I got to think, what do we do? But we know the dollar's basically gone, and we need to wait for the new medium of exchange, because you're going to get fucked. You're working at your job in IT or finance or doctor or lawyer, and you're getting paid in this. You're not getting paid. You're getting paid. This is worthless, right? So you get zero for it. Now what do? How do you spend it? So as long as you can get paid and still spend it, you're okay. But what's going to happen as the inflation hits and milk's now $10? Wait a minute, your paycheck's not going anywhere. Right now, all the expenses are higher, and that's what really is what's going to happen. So we need the new medium of exchange to survive, which has to be gold back. And do not think Bitcoin's going to save you. It won't. The only thing that's saving you is gold and silver. Now, I'm not saying that. I don't care if you buy it or not. That's not how gold and silver goes up in value, like the Ponzi schemes of Bitcoin, where it only goes up if somebody buys it. So if nobody buys Bitcoin, and I saw it down in the 56s, 56,000 yesterday. So it's gone from what, 70 some thousand, and then here comes BlackRock in, and now it's 56,000, going down to what, 20,000. They're just going to sell it all, right? You're going to get fucked in that because they want you to lose your money. That's why JP Morgan is doing the derivatives to keep you out of gold by, oh, well, the gold price is down. I don't want to be in gold. Fuck, this is a great buying opportunity, especially silver. So with that said, you don't really understand that that's what's happening. So keep that in mind. The gold and silver are your protection and your only protection because they can't print it. So be leery. When the prices go up, your pay's not going to go up. Your pay will go down. And even if you do get paid in it, it's not going to be worth anything. That's when you better have the gold by then. You can't wait. You're going to be screwed because the dollar won't have value. So it's up to them. And I think that's what they're panicking. They haven't adjusted. So in other words, they need a new, hey, Greg and John, they need a new medium of exchange. They need a gold-backed dollar, and the central bank digital currency is not going to help. It's the same toilet paper as this. It's just digital toilet paper. So you're screwed if you don't have gold because this is worthless. So if you're going to work and you're getting paid in this, you're in trouble. So what they need is the new currency so you can get paid in gold-backed currency and then use it to go to Kroger's and buy your stuff and not get hurt or buy your gasoline. That's going to be the biggest problem because when they go gold-back, or gold for the oil, that price, you go to the gas station, it's $3 now. It'll be, I don't know, $50 for a gallon. It's going to be tough. So just prepare. So you can't buy enough gold and silver. Just buy as much as you can. Get the gold and for travel. The silver you'll replace the gold with. So if I go to the coin store and all of a sudden I don't want the dollar anymore because it's devaluing, and silver's now 1,000 an ounce and gold's 10,000 an ounce, I'm going to take 10 ounces of silver and buy the ounce of gold with it. So that's what I'll do with my silver to get gold. Who's going to have 10 grand? How much gold can you buy? I mean, could you imagine going with 10 grand and getting 1 ounce? I mean, it's tough enough now. You'd only get, what, 2,500. You get 4 ounces, a little bit more than 4 ounces with 10 grand right now. It's rough. I think I got 7 or 8 ounces when I did it 3 years ago. I think it was 7. I got some halves and quarters just to give me more. Anyway, going to buy brass, in case you need an illusion where people think you have gold, or there's some problems or something, they won't know if you got brass, and they'll take it thinking it's gold, and you'll pull a professor on them. You'll pull a money heist on them. So maybe buy a little bit of brass, put it in a bag like it's gold, and then they'll take your brass, and you're like, okay, it's not worth anything, but it's better than you taking my gold. So just try to protect. It's like a bulletproof vest. You wear one, you hope you don't need it, but just in case. So try to protect yourself. So right now the key's protecting. Get out of your dollars, get into gold, get the money out of the fucking bank and out of the fucking stock market because it's not yours. The bank won't give it to you, and neither will the stock market, especially if it's JP Morgan. You'll never, you think you own the shares, you don't. And we showed that. I think Egon had that a few days ago. I showed that. All right, I'm off to the pool. Be back for what's 1 o'clock to probably like 3:34. I'll come back for baseball and the NBA. All right, everybody. Well, have a good day. I hope this helps. We've talked about it enough, so you should have it. You should be able to explain it to your kids why you can't. You don't want dollars to go to the restaurants. And anyway, so that's about it. So I hope you're well. Have a great day, and www.teaserking.com. Take care.